Thank you. It's great to be here.
All right, so we got our year-end show. We're covering big tech. Amazon, this thing was left for dead at the end of 2022, down near 81 bucks a share. We've seen a big resurgence to 52-week highs so far in 2023, Landon. Do you guys have the data that kind of supports this? Because this has been a spectacular rise over the last 12 months.
It is. It's nice to see Amazon trading so strongly in December. It's still got a long ways to go. Not a long ways, but it's still got a ways to go to get to the pre-lockdown levels of a couple of years ago. But it's on a nice run. And I'll tell you what, a lot of the data that we see is pretty bullish. I mean, you think about some of the numbers that they've been putting out. They've had over $46 billion in advertising. They're adding advertising to Prime Video, which is really nice. We saw what happened with Netflix with advertising. So I think that there's some room there to the upside. And of course, when you talk about, end of year Amazon, you got to talk about how the holiday shopping has went. So, we're seeing a plus 8% mentions on people talking about using Prime and using those Prime features for their shopping, which is, obviously it's stronger than last year. Last year was pretty good, but it's nice to see that a lot of consumers are turning towards Amazon for those holiday needs. And you can see here, the run up over the last little bit, still really nice on a year-over-year basis. And also, you know what? They're delivering a lot of goods. They're actually competitive, actually delivering a little bit more if you look at the charts of than UPS and FedEx in 22. So we're likely to see that gap widening. So they're getting into the delivery game. And of course, that's a big part of what they do, is getting people what they need very quickly. So, when it comes to consumables and everyday essentials, people are getting used to customers are getting used to that very quick and convenient delivery to where they need something and they're getting it today, maybe later in the day, or worst case tomorrow morning. And what that does is it sets that precedent in the consumer's mind, is all right, I'm going back to Amazon next time I need something. And that's a very, very powerful thing, especially when you think about how that could affect other companies like Target, Walmart, Costco. And if you're just able to get on your phone or your computer and get something delivered to you right away, it's going to drive that engagement and the stickiness of the use of service. Now, speaking of those companies, you can see here the happiness levels. Amazon's right there with Costco at 70%, 69%, a little bit ahead of Target. And as we've seen for most of LikeFolio data, Walmart bringing it up the rear at 60%. Not a surprise there, but it just kind of goes to show you that they've got happy customers. Costco's leading the way, but we're only talking about a point here difference between the two. So for all intents and purposes, you can say that Amazon's basically at the top of consumer happiness when it comes to large retailer delivery. So love to see that. And also, you talk about the stock. They've had a good run up in 2023. They've done better than Google, Amazon, or Google, Apple, Netflix. Amazon has better than all those other companies. But of course, there's still room to grow to get back to where they were. The only sort of, hiccup that we've got for Amazon is their AWS services. So, they were plus 35% in 2019. Now they're plus 15% in 2023. And you can see that, when you look at mentions, people talking about using them, they're down 11%, whereas Microsoft and Google doing a little bit better. Google leading the way, as you can see here on a mentions basis on a year over year. So while they're still growing, their growth has slowed significantly. Like I said, from plus 35 down to plus 15 this year in 2023. I'm interested to see how generative AI affects this, because I know a lot of companies are basing their development on AWS. Some of them are going all in on AWS. So it's going to be interesting to see if this sort of caveat, this is the one area that we're a little unsure of with Amazon, if that goes away in the early parts of 2024 or not. They've got a great platform. I can tell you, LikeFolio is on AWS exclusively. We love it. But a lot of people are building new things, and what percentage of those are going to go on Amazon versus Microsoft and Google? So with the consumer, we see nothing but greatness with them. I mean, they've done really well in the past. We believe that 2024 is going to be great. With developers, I think is the only area where I'm a little concerned that Google may be taking a little bit of their market share here.
Landon, their stock price has reflected a new focus on balancing growth with earnings and free cash flow. And that's made this stock look a lot better to a lot of people. The market's kind of fallen back in love with Amazon this year. But what you mentioned about next year and going forward, it's got to be two things, right? As new budgets come out for next year, people are going to look at it at advertising that dipped and now is starting to recover. And it's AWS that dipped and it looks like it wants to recover. So if you want to focus on two things for next year, it looks like AWS and advertising growth, but this focus on earnings now, not just spending and growing, is really starting to affect the price of this stock, Landon.
Yeah, you're right. I mean, for a long time, it was all about what's our growth rate. That's it. Who cares what the expenses are? Let's see how much revenue we can get. But now, this is no longer that small company. This is a dominant, massive company. And every little tweak that they do, every basis point matters with this company, because you've got such big numbers that if you can squeak out 0.1% here and 0.5% there, you are making a massive difference to shareholders. So it's got to be all about efficiency, and it's got to be getting those consumers to return back. So what I'm saying is I think that they've done a really great job with the consumer, and we see no signs of weakness. I mean, for a while there, we were looking at, is Target, is Walmart, maybe Costco going to take some of Amazon's, take some of their share of the pie, and I think that for a while, especially during the lockdown, Amazon struggled. I mean, they went from you guarantee it's 100% you're going to get your item in 2 days to now it's like 2 weeks here and there, and they struggled for a while, but now they're back on track. You're getting things definitely within 2 days, a lot of times same day, and I think that they've done an extremely good job with consumers. Now it's just a matter of getting more efficient, increasing those earnings, and then just like we said, it's all about AWS for some of that growth. They've got some serious competition there, and I don't think that they have, the name recognition doesn't matter as much. The brand loyalty doesn't matter as much as it does with consumers versus with developers. So they've got to do a good job competing with Microsoft and Google, and those are two tough names to compete against. But definitely bullish in 2024, and I love what they've done in the month of December for 2023.
Yeah, that was going to be my call going into 2024. You guys are still bullish, even though stocks rallied up to those 52-week highs. But Landon, how important is the margin side of this advertising boom that Amazon's seeing, and the partnerships that they've got in AWS at this point, which kind of lend to that credence of, hey, if they're already the biggest cloud provider and the AI tools that they're generating right now for their customers, is that give them a leg up?
Yeah, absolutely. I mean, first of all, on the advertising, it's a small part, I think, of what they do so far, but the fact that they're getting into it, they're adding it to Prime Video, it makes me, obviously bullish on revenue on that side of things, just like we talked about with Netflix. So I love to see what they're going to do there. They've got so many people on their website all the time. It's not hard. It's not going to be difficult for them to increase revenue on advertising. So very bullish there. When it comes to AWS, yeah, they're the clear leader, but that growth is slowing, and it's kind of a bit of a wild west when it comes to AI right now, because it's a brand new technology. We're not talking about building web applications or mobile applications anymore. Now we're talking about something completely new. And if you can build something on a platform that is 10% better, you're going to move your development resources from one to the other. Now, I'm not saying that Google and Microsoft are better than Amazon, but I'm saying that the competition really, it's a huge factor, because as a development firm, you've got to know where you're going to get the most bang for your buck. And AI is so competitive when it comes to computational reliability and performance, that you will move based on those types of things. Whereas when it comes to web or mobile app development, it's not that critical that you have extremely fast processing that can do a ton of calculations per second. But when it comes to AI, it is extremely critical. So people will move to the best one. So that's, I think, their biggest potential weakness. But yes, 2024, LikeFolio is bullish Amazon. Even though they're high on the 52-week chart, zoom out a little bit, and you can see there's room to run.
Yeah, I agree with that. Also, you look at a 3-year chart or something, we're not even close to highs yet. So definitely have some room to run if they continue to execute. All right, great stuff. Great data as always, Landon. Have a great day.
Thanks, guys. Happy holidays. Happy New Year.
All right. That's Landon Swan, a co-founder at LikeFolio.